Hello, good morning. It's Adil Fazal here, market analyst at CFDs.com, a leading spread betting and CFD brokerage. Be sure to visit the site to certainly learn more about their products and services that they have on offer, which is www.cfds.com. And alternatively, the educational website as well, where I post my analysis and updates, etc., is www.cfds.education. Okay, interesting. Okay, this morning has been a real bugbear from a trading perspective. It really has been very strange, especially given the fact that we had the Asian markets pretty negative overnight, although the Nikkei certainly was higher, obviously post the Apple news, and obviously the Nasdaq was higher overnight as well. To a large extent it gapped higher, but then obviously sold off once it hit the 4660 zone. Okay, so Apple earnings, Twitter earnings. Okay, Apple earnings more or less came in line, nothing spectacular. It did miss on a few fronts. And with regard to Twitter, the Twitter shares were down, obviously, in terms of user growth stalling, etc., down 10%, I think even more. And certainly is a negative picture from my perspective. Okay, now going into Asian markets, we've had a Shanghai down minus 1.7%, so certainly a risk-off scenario there, along with the Hang Seng down 0.8%. So therefore, again, a risk-off scenario. We had the Aussie and Kiwi down overnight. We've had copper and oil down quite substantially overnight, although it has started to rebound to a large extent at present. Okay, so we certainly are seeing weakness there. Okay, now in the morning it was a risk-off scenario. In terms of European equities, if I just look at my board, which I always have to update, given the fact that I need to keep abreast of the market moving news and decipher whether it's a risk-on or risk-off scenario. We had weaker French and German data. French data, German consumer confidence weaker as well. CNUC, the actual major, very similar to BP in terms of its steel producers and oil producers, etc. It's a obviously commodities company. Basically reported a large sales drop overnight. We had weaker Chinese data as well. We've had Volkswagen earnings and on the downside, very negative. And also the provisions have increased as well. So it's certainly a negative scenario there. But the market is certainly perceiving it as positive thus far. Hence the reason why you can see the German DAX is currently higher at present. So if I just bring up a chart of the German DAX, where art thou? Here we go. Have I got the German auto sector here? Automobile sector is probably the best thing. Okay, so we've had a pop on the German automobile sector. Whether or not that lasts is another story. If you look at the daily chart, you can see ever since the earnings came out, we've certainly have a bit of a pop. It certainly has run out of steam though at present, so certainly observe that for now. With regards to the German DAX as well, certainly if you look at the 10-minute chart, obviously we had a pop. Can you see the rally here? Initially we started off here, even though China was down overnight, we did gap lower to a large extent, and obviously off we went to the races and we hit a pivot high of 10,790. Whether or not we can sustain that is a totally different question, but for now that's the scenario that we face. Okay, now in terms of Volkswagen failing to cause a risk-off sentiment and negating the Chinese sentiment, we had Megit that was down 21% on profit warning. Lloyd's TSB earnings came out stronger, but the provisions increased, so therefore that's negative. And I think the shares were, since our last check, were down 4%. You have Twitter, obviously we already know, Antofagasta as well, cuts production. BAT concerned of economic slowdown and also hit by currency movements, and especially the stronger dollar. To a large extent, hawkish rhetoric yesterday or overnight from the Fed. Talk about Miss Yellen adhering to the Phillips curve and not waiting to see the actual inflation on the horizon, and she wants to preempt. So why Fed may hike rates before seeing whites of inflation's eyes. A very good article on Reuters. Further falls in America's jobless rate will lead inflation to start rising early next year, according to a forecast based on research. Federal Reserve Chair Janet Yellen has cited as shaping her confidence a rate hike could be needed this year. Interesting. Okay, so a stronger dollar generally would indicate that the commodities would certainly come under pressure, and that's exactly what happened overnight. Obviously we had the Chinese markets down as well, emerging market concerns reignited, etc., etc. And the biggest cause for concern that everybody should be worried about is the fact that we've had a Chinese rate cut, and yet the Shanghai index has certainly reacted negatively. I mean, if I just bring up the chart, the Shanghai index now, and certainly show you and explain to you. Look at the move there. I mean, it's not exactly, it's failing at the 50% fib, so a lot of the move was already priced into this market already. So given the fact that we are seeing weakness there, you are expected to obviously follow through on that weakness the following day. Now this is the chart of the Nikkei on the 27th, so today's price action hasn't been upgraded yet, so the Nikkei is actually into the 200 MA as we speak, okay? So that's certainly something to take into consideration as well with regards to assessing risk. Now the biggest game changer this morning, and initially the stock market did fall because based on my analysis it was a risk-off scenario, and that's exactly what I expected, and that's exactly what occurred. My FTSE shorts were plus 20, my Euro stocks were plus 10. The game changer this morning really was to do with the risk bank in Sweden. Okay, they kept their interest rates steady, but they, I mean, let's read this article on Fast FT. Sweden's risk bank has held interest rates at minus 0.35% as expected, but still ramped up its fight against deflation by expanding its bond buying program by an extra 65 billion and pledging to keep the benchmark repo rate at the current day for a longer time. Okay, so any talk of stimulus, any talk of QE, as we all know, triggers a short squeeze, and that's exactly what's happened this morning. That obviously triggered off the move in oil, triggered off the move in copper, triggered off a lot of the move in Aussie and Kiwi, etc. And the euro is a different kettle of fish. Now the euro has moved higher, and that still has failed to cause a sell-off in European equities, and that is very interesting. Okay, that is very, very interesting going forward. So again, we shall see exactly how that responds. Citing considerable uncertainty regarding the strength of the global economy and risks to inflation, the central bank said that it considers it necessary to make monetary policy more expansionary. It is prepared to do more, it added, saying it is ready to intervene in the currency markets if the strong krona threatens inflation, blah, 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 blah. Excuse me. Okay, so that's basically the situation that we have here, and that obviously has prevented the European equities from selling off. Okay, that's really the actual explanation in a nutshell. Now let's have a look at the market from a technical basis now. The German DAX itself, looking at a 10-minute chart, obviously we've held a support zone here at 10,690. Whether or not we can sustain that move is another question. You have this resistance at 10,810, and then obviously resistance at 10,850. Below you have support at 10,660, and then obviously the gap fill. Now, given the fact that Volkswagen is positive, even with the negative news in terms of its earnings, etc., that's certainly helping the actual German market. And obviously, given the fact that you've had this extra stimulus from the risk bank, obviously has helped European equities again from a large extent. The actual chart of the CAC itself, okay, the CAC still has an unfilled gap on below. It's an inside bar given the fact that we're consolidating in the red candle from yesterday. 60-minute chart certainly has put in a bearish engulfing candle, so that should be very, very interesting going forward. And the 10-minute chart, as you can see, thrust higher from the morning. We broke out this falling contracting wedge, pushed higher. The diagonal trend line resistance is still holding thus far, so we have to respect that for now on the French CAC. Okay, the Euro stocks, this should be interesting again. The Euro stocks, as you can see, we thrust higher. We hit pivot high of 3415 before we fell back to 3400. We shall see exactly how we trade from here. Looking at a 60-minute chart, we certainly have a bullish engulfing candle first of all. We're consolidating. It looks as if we want to go and test out the highs at 3440. Given the fact that obviously this Swedish bank move has certainly triggered off the QE trade again. Now the FTSE 100 next certainly had good earnings, but certainly did indicate certain concerns going forward. So again, that's certainly something to consider. Now the way in which this chart is trading now, it certainly is looking like an inverted head and shoulders formation. Now, can an inverted head and shoulders formation play out on the back of China being down minus 1.7%? I think not. Okay, so don't be surprised if this does attempt to play out and then you see a massive reversal. Okay. Back to the pivot lows at 6360. So I'm certainly expecting that on the FTSE 100, but EU equities certainly seem to be supported by this QE move. Now the Nasdaq certainly is holding well. The S&P 500 is certainly holding well. So it will be interesting to see how price action reacts today, and what we actually how the market reacts itself. Okay, so again, this is your key diagonal trend line, so whether or not we can pierce and penetrate this will be a key. Okay, question that we all need to obviously answer. Okay, this is a situation that we find ourselves in terms of the markets themselves. Fundamentally, certainly is a strong argument for a move higher, given the fact that you have the Swedish bank doing QE. Obviously, Nasdaq higher overnight, even though Apple earnings certainly is circumspect, and Twitter was down 10%. Okay, and given the fact that Shanghai is down minus 1.7%, but the Nikkei is certainly higher. So a lot of mixed messages this morning. Obviously, trade your setups, rely on your analysis, and always adhere to and respect your stop loss. Okay, folks, I think that's a wrap. And safe trading. Be sure to visit cfds.com. Obviously, with regards to your trading needs, www.cfds.com, and be sure to check out their products and services. And happy trading. I'll do an afternoon update on the our European markets at the end of the day, and I'll do a pre-market US market analysis as well, and get that out to you. Goodbye now.